Hello, everyone. My name is Chad Hart. I'm an extension economist with Iowa State University. And over the past couple of weeks, USDA has provided us some new reports that help us look at the agricultural markets and how they've been adjusting to not only the war that's been happening in Ukraine, but also just the global agricultural situation as we look out there. And so I'd like to sort of dive into those reports, what they sort of indicated, and how's that shape up for us as we look at the crop markets over the course of 2022 and going into 2023. So I'll start with, sort of looking at the nuts and bolts, the basic numbers that USDA puts together when you're talking about U.S. corn supply and use. And the first thing I'll preface on this is that as you look especially at the gray box here, which represents the usage side for U.S. corn, that the 2022 numbers that USDA has right now were released just before the war started. So these do not fully reflect the impact of the war just yet. Now, they have updated the 2021 numbers for the war because we get that with each of the monthly WASDE reports. But the monthly WASDE reports won't start showing numbers for the 2022 crop until we get into May. So that's when we'll get the first indication of how these numbers are going to change as we're looking forward to the crop we're about to plant. But sort of the storyline that we've gotten from not only the acreage report that came out at the end of March, but the WASDE report here in April, is it does point to tighter market conditions, especially as we look at the corn market. So looking at the table here for 2021 and 2022, the big things that USDA has been seeing as we've moved over the past couple of months is that on the usage side, as we look at the 2021 numbers in the gray box, that they have been working that number higher. In this case, this month, what they did update was they raised the ethanol number up 25 million bushels. Now, they did offset that by having the feed number reduced by that same amount. But when you think back to what we had last month, they had another ad there that they saw on the export side. So when I'm putting this information together month over month, we are seeing more corn usage here, and a lot of that's being driven by the combination of the impact the war is having in terms of global feed supplies, and corn definitely feeds into that, along with the higher energy prices that has been, driven by the war as well, leading to more expansion for ethanol as we're looking out there, and especially given the recent developments of the president announcing, the push for E15 to be around year round instead of, facing a cut down in that during the summer months. So we have seen corn usage picking up here. At the same time, too, though, what we got out of the prospective plantings report at the end of March said that U.S. farmers are looking to plant less corn area here in 2022, with a lot of that reduction being sort of driven by higher input costs, and specifically here, concerns about fertilizer costs as we're looking out there. So we're looking at the potential of 89.5 million acres of corn being planted. That's down roughly 4 million acres from what we planted in 2021. Given USDA's trend line yield of 181 bushels per acre right now, that leads us to about 14.8 billion bushels worth of production in 2022 if we are able to maintain trend line yields. And if you compare that to where USDA had corn usage looking forward before the war for 2022, you would notice down there that total use line is at 14.8 billion bushels there as well. So right now we're set up to try to produce about as much corn as we use in a year, meaning that stock levels do not move that much. We're looking at sort of maintaining status quo there. That could likely, though, mean higher prices, especially as we're looking at a shrinking supply here in the U.S. at a time when we may see, especially the number I'm going to tell you I'm watching, is that export number for 2022. If global demand for feed remains as strong as it is currently, we should see more exports than USDA is currently projecting for 2022. Now, that area that left the corn market came into the soybean market We see about a 4 million acre increase here. And it's a similar sort of tale as we're looking at what's going to be the export side of the picture for 2022 that may end up setting the stage for where prices go from here, given how high they've gotten already. For the 2021 crop, we continue to see strong domestic usage, and we've been watching USDA bump up that export number over the past couple of months. Again, a lot of this now is because of the war in Ukraine, limiting not only the wheat and corn supplies that come out of the Black Sea region, but also limiting the available of vegetable oil that comes out of there. And the big one that comes out of the Ukraine is sunflower oil, which here in the US, we don't produce a lot of sunflower oil, but soybean oil and sunflower oil compete in that vegetable oil market. So fewer soybeans fewer sunflowers or sunflower oil available means more demand backing up here for US soybeans. And so we've definitely seen a little bit of a boost in exports, especially over the past 4 or 5 weeks as we look out there. Now, going into 2022, if we get that 4 million acres of additional plantings on the soybean side, given USDA's trendline yield, we're looking at a potential 4.6 billion bushel soybean crop, which would be slightly bigger than what we're seeing in terms of usage, at least currently as we look out there. But again, the big number here to watch will be that export line. Do we see some additional growth, especially if this war continues to go on here? Now, looking at the acreage shifts overall, this is a graphic that sort of shows you the changes in two different forms. On the left is looking at the total number of acres and the shifting over time. And you can see that soybeans is on the top, gaining nearly 4 million acres. Corn's down on the bottom, losing nearly 4 million acres. And you can see the other crops in between. So soybeans wasn't the only place where we saw some gains, especially in the southeast. We saw a move towards cotton. Last fall, we did see a little bit more winter wheat planted, but now it looks like we wish we would have seen more. But you also see some growth in some spring wheat categories, some barley out there. There's sunflower. We do grow a little bit there, and we did see some growth. Where we did see the sort of reduction is in hay production out there. Again, row crop pricing is such that we did see more being devoted to row crop rather than forage crops. We do see, though, a sizable cut in not only corn, but also sorghum area as we look out there. Now, if you look on the right-hand side, that's showing the crop shifts when we're looking in terms of a percentage change. And the biggest one would be durum wheat. That's food quality wheat, looking here in the US, mainly for pastas. Barley, sunflowers, cotton, and then soybeans weighing in there. And so while corn did take a large acreage hit, it was one of those, it had a smaller hit relative to its base in terms of percentage. It was sorghum and chickpeas that really lost the vast, a good chunk of their area as we look out there. But these acreage shifts show that, yep, as we look at these higher prices, farmers are also reacting to higher costs. And definitely the input cost struggle for farmers did change up what farmers intend to plant this spring. Now the question going forward is, here's the plan, what we hope to do. What does Mother Nature allow us to do? And so this goes back, and I like to show this graphic from USDA because it explains why we can see the acreage differ between the March planting intentions versus the June, what actually gets planted and is reported in the acreage report. So as you look here, I'll start with the lines. The gray and the black lines in this chart show the average timing of when we plant our corn and soybean crops here in the US. And you can see that planting usually starts here in April. And as I do this talk on Good Friday, the idea is that, we should be at the sort of beginning of the planting season here within the majority of the US corn and soybean crops. And you can see that planting continues on until we get deep into June when we usually have most of planting wrapped up. Now, the bars there, the yellow and the orange bars, are showing you when USDA surveys farmers about acreage. And so the yellow there that started in late February through mid-March, that's the timing of the survey for the prospective plantings report. So it's trying to talk to farmers before any seeds have dropped into the ground and figure out what is the intention, what's the plan for planting this coming year. Then when we do the survey in late May, early June, that's looking at what did get planted. And so you can think of it as one of the biggest reasons why those two surveys give us slightly different numbers is that weather conditions influence a lot of what farmers can plant versus what they intended to plant. But you can also see some shifts in acreage due to pricing as we move through here, as farmers reevaluate their planting decision as they move through the year as well. One of the biggest things I think that we were looking for in the March report, though, was we expected some shifts in land between the crops, but what we also expected is that we thought we might see a few more acres coming into crop production. So this is a graphic that USDA puts together looking at what they call principal crop acreage. So I want you to think of the top 20 crops produced here in the US, and that includes hay production in this case, and looking at that crop. Add all that crop acreage together, and that's this principal crop area. As you can see here, as you look at the far right-hand side of this graph, from 2021 to 2022, we didn't see much change in that overall cropland total. On the other hand, when we think about how strong prices are across the board, normally we would expect to see more of a bounce. And in fact, now I want you to look at the left-hand side of this graph. The last time we saw prices this strong would have been back in 2011, 12, 13, where we had prices that were very high, but we also had costs that were rising at that same time. But those higher prices tended to elicit a stronger acreage response. We were adding land into crop production back then. As you can see, between 2013 and 2014, we were bumping up, nearly 2 million acres in total. In fact, we had 325 million acres in principal crop area. Now we're down to 317, and we really didn't see a movement here. And that was one of the, I would call it, unexpected things that came out of the March report, is that we did not see some additional land entering in the crop production. And historically, we figure, what we see is that if we hadn't intended to plant that in March, we don't tend to pick up more land as we move into June. In fact, looking back over the past 10, 11 years here, this is looking at the difference between the March total versus the June total in terms of that principal crop area. As you can see here, if we do add land, it's not very much, roughly about 500,000 acres in total. What we do tend to do is, if anything happens, it's usually a change on the downward side. As you can see there, when we plant less area, oftentimes it's 1 million or 2 or 3 million less acres, and oftentimes those are the wet years where we're prevented from planting. Now, that's not necessarily a big concern yet this year, but it is something to watch here, meaning that we're not probably going to add a lot of additional land, but if we do see some planting problems out there, we're likely going to reduce that overall total of land in crop production. Now, the drought does loom large when we're looking at our potential production here in 2022. The drought, not only does it have the potential to limit that production as we're looking forward, but it also does set up the stage where hopefully it does mean drier conditions, which does tend to mean that when we do get rolling in terms of planting, it should move fairly quickly. So let's call that the potential good aspect of at least being dry right now, is that when the fields do open up, we should be able to move fairly quickly because they are not waterlogged. We are not seeing the potential for problems like we had back here in 19 and even in 2020 of seeing some land fall out because of prevented planting. But it also raises the prospect of, even if we were to get additional land into production, how much yield could we expect from there if this drought does continue to linger here, especially in the central part of the US? Now, thinking about, the global situation, I like to fall back on this map because I think this map is helping highlight why the global agricultural markets have moved significantly higher due to the war there in the Black Sea region. This is a map that's basically showing global farmable land out there. So anywhere where you see color on this map, that's an area that can be farmed and often, already is being farmed as we look out there. The colors on the map indicate the quality of the soil and, gives you some idea about the agricultural productivity of that area. What you're really wanting to look for on this map are the green areas because those green areas are representing highly resilient, highly productive soils. And as you look at this map, what you find is that those green areas, there's only about three really big green areas on the map. And those would be areas that do tend to produce what I'll call an excess bounty of agricultural production in that area. There's the central part of the US. There's that area down in South America, and that's why we spend so much time talking about Argentina and Brazil. But then there's the Black Sea region, and that's why Ukraine and the war there has taken sort of center stage when we're looking at our agricultural markets. A lot of the rest of the world relies upon those green spots to not only produce enough for their own needs, but to produce enough that can be exported throughout the globe. And especially over the past 20, 30 years, agriculture has become a global marketplace. The big consumers that tend to buy from the Black Sea region are the areas that are there in North Africa and the Middle East. And so they're the ones that are truly being impacted by the war directly. But it's not that they have to go without. You can think of what's happening right now is that since the Black Sea region is tied up due to the war, the customers, the global customers that used to buy from that area are now basically probing the other two green areas here in the US and in South America to find the supplies that they need. And so that is bidding prices up, not only here in the US, but worldwide. And so that's sort of the dynamics of why we're feeling the war so quickly when we look at our agricultural markets. In fact, as I look at how prices have changed over the course of the past couple of months, you can really see that, especially as we're looking at new crop futures, looking out to this fall in terms of harvest time for our corn and soybeans. I've normalized those prices so that we can compare wheat versus corn versus soybean here. So what I've basically done here is said, let's take the price that was at the beginning of January, let's normalize that to a value of one, so that here you can see that, as you look at these graphs where I've got, for example, corn, the blue line here, that's up there around 1.35 in terms of that index. That tells you that corn prices have gone up roughly 35%. So 0.35 translates to 35% increase over the course of this year. And a lot of that increase has come since the start of the war there, right about the end of February, as you look here. Now, the crop that's faced the largest increase has been wheat, and specifically winter wheat, because when we think about the Black Sea region, it's winter wheat that's that main focus there. You can think of a lot of that area in the Black Sea region is like Kansas in terms of wheat production, and mainly it's that wheat that's planted in the winter. It overwinters through the winter time, and then we harvest that then late spring, early summer. So that's the one that's feeling the largest pinch. And as you can see here, prices are up basically 45 to 50% as we look at those wheat markets. Corn's the next one down, up about 35%. But then you see spring wheat, so the wheat that can be planted around this time of year in the Dakotas, they're up nearly 30%. And even soybeans is up about 18% when we're looking over the first 4 months of the year here in the US. So we've seen sizable increases in pricing, and a lot of it is, like I say, directly related to what's happening with the war there in Ukraine. Now, not only have we seen that sizable price increase, but like I say, we've seen, those markets that typically rely upon the Black Sea region start to look to the US in order to source some crop. And especially as we look at soybeans right now, that has definitely been a case of where we've seen some additional export sales this time of year that don't normally happen. This is a graphic showing you our export pace through the 2019 and 2020 crops, and the red line here is what we've done thus far with the 2021 crop. And as you can see, that the export pace for this past crop was running around our 5-year average up until about when the war broke out. But since the war has broken out, we have seen that gap higher, moving well above our average pace. and in fact approaching the record pace that we saw back for the 2020 crop. So we are seeing some additional global sales due to the war and the uncertainty it creates. Now, on the corn market, we haven't seen quite as much of a jump there, but we are still seeing a fairly strong export pace as we look out there, and one that could be building strength as we're moving forward. In fact, one of the key areas I'm watching here is not only looking at what's happening there with the North African and Middle East regions, but also watching China here, because China had been pulling more from the Black Sea as well, especially if you look at the data from last year into this year. They had been switching over to Russia and Ukrainian supplies over the past year. That has now sort of slowed down because of the war, and we've seen more of those Chinese purchases turning back towards the US again. So that's building some strength for additional support here for our prices because of strong international sales at the moment. So when we're looking at our price series, going forward here, what we are seeing are very strong prices for nearby corn futures. Those strong prices maintaining all the way out through 2023 into 2024. And it's been this way for quite some time, but we've seen some additional strength here, especially over the past few weeks. And again, a lot of that is being supported by some additional international purchases. That bodes well for maintaining these higher prices as we're looking forward. And it's not just corn where we're seeing that. Soybeans has also been recovering some. We did see a little bit of a setback due to the acreage shift, but even since then, we've seen soybean prices start to work their way back higher again, and we're maintaining these higher prices as we look deeper into the year. The challenge for a lot of farmers is, yes, we've got great prices, but they're also seeing those costs rise as well. Not only fertilizer, but we're seeing it across many of our agricultural inputs. In fact, it's hard to find a market right now that's not experiencing at least some form of inflation in some way, shape, or form. Ag is not immune from that. In fact, you could argue that we sort of led off with this because our prices were rising significantly before we saw most of this inflation rear its ugly head, and it continues to be a challenge as we're looking forward here. I think the sort of, I'll put it this way, the good news for farmers is it looks like there's support for these prices staying fairly high as we work through the first half of 2022. I think the balance of the year, though, depends upon one, how long the war does last in the Ukraine, and two, do we continue to see that strong international demand even in the face of these higher prices? Typically, export demand is very sensitive to prices. And so when we get prices in this rarefied, levels that we're seeing right now, it does tend to cut back on that. However, that's usually in times when the rest of the globe is still producing at a normal pace. If anything, we know 2022 is not likely to be a normal production year. After all, the Ukraine, just like the US here, should be planting corn about this time. The challenges are going to be, though, how do you plant a crop and, of the size that we would be talking about in Ukraine and southern Russia during a war effort there? And even then, how would you go about exporting that crop during a war as well? And so I think those supply issues globally do create more potential support for that demand remaining fairly strong as we work through 2022. But it is something to be concerned about, I think, as we look out there, and watching signs that we could see that slipping in international demand with these higher prices. But at least at the current stage of the game, we're not having that issue. We are still seeing strong export sales out there with these strong prices, boding well for farmers, at least as we enter the fields this spring. Well, with that, I want to thank you for your time again and for watching these videos. We'll provide another update here. My guess would be probably mid-May when we get that first updated snapshot of for 2022. And especially, like I say, I'm looking at that international demand as a big key as we're looking forward here. But with that, again, I want to thank you for your time. My name is Chad Hart, Extension Economist at Iowa State University, and I hope you have a happy Easter and a happy and healthy planting season as we look forward to growing something here in 2022.